Hello everyone, welcome back to Scar Trader, where we turn past pain into future precision. If you're new here, don't forget to hit the like button and subscribe. Now let's dive into the latest Bitcoin price action and break down what's really going on under the hood, because the market just gave us a mixed bag of signals. Let's start with the elephant in the room, Bitcoin. Bitcoin faced rejection right at the July monthly close. We saw price climb into the 116K area, but it couldn't hold. Sellers stepped in and defending that level, and we got a swift rejection, as you can see on this 4-hour candle. But here's the twist: even though we got a sell off, the volume on the dip this morning to 113.6k area tells a different story. It wasn't panic selling, it wasn't distribution. Instead, it looked like a healthy pullback with enough absorption for buyers to potentially fuel another attempt to reclaim that 116k area. So what does that tell us? It tells that the market isn't fully bearish. This underlying demand stepping in on dips, which is a strong short-term signal that bulls aren't done yet. The zone between 113.5 to 14 114k could now act like a springboard, as you can see on this SMA 20, that how it's respecting that. However, yesterday we talked about a major bullish factor outside of crypto, the SPX and NDX, the S&P 500 and the Nasdaq index. Both indices had left gaps on the chart after Friday's dip. Gaps are like magnets, price often returns to close them before resuming the trend. Well, that has now happened. Both indices closed those gaps, which temporarily supported crypto's upside, right about here. But now that this gap fill play is done, the equities market looks ready to drop again. But remember, crypto follows equities more than we would like to admit. If SPX and NDX start correcting deeper, it could drag Bitcoin down with it, or at the very least, limit the upside. So, what's the takeaway? Right now, BTC is caught in a zone that doesn't offer clean risk reward. It's in that awkward middle, too late to short, too early to long. Why? Because for any solid trade setup, we need two things. First, a clean entry trigger. Second, a logical stop loss placement. And now that we have neither, and right now we have neither. Price is hovering between support and resistance with no clear invalidation level for bulls or bears. That makes this zone dangerous for swing trades. So what should you be looking for next? Two things. First, another dip into the 113 to 113.5k zone, which is about to get hit. If we see buyer interest step in again, that could be a low risk swing long setup as long as we get confirmation with volume and the structure. Volume plays an important role. Secondly, a clean breakout towards 116k and above with support holding. If BTC reclaims 116k, consolidates above it, and shows strength on volume, right about here, then swing entries start to look more promising. That would give us a better defined stop below support and target back towards 118k or even higher. Until then, this is a no man's land for traders. Sit on your hands, protect your capital, and wait for the clarity. So, to sum it up, BTC is showing signs of resilience, but macro headwinds are creeping back in. Trade the level, not the noise. If this breakdown helped you make sense of the current price action, hit that like button and drop your thoughts on the comments. Are you bullish? Are you bearish? Or just confused like the rest of the market? Subscribe for more real-time breakdowns and I'll see you in the next video. Until then, stay sharp, stay disciplined, and remember, the comeback is always stronger than the setback. Thank you.